Hey everyone, welcome back to Corporate Decoder. Today, we're diving into the latest from Bowhead Specialty Holdings, and let me tell you, this report is like a box of chocolates. You never know what you're gonna get, and in this case, it's a mix of good news and some potential bumps in the road. We're going to break down their financial performance and see what it all means. First off, the report we're looking at is a Form 8K, which is basically a quick update that companies send to the Securities and Exchange Commission, or SEC, to let investors know about important stuff happening. This one is dated February 25, 2025, so it's pretty fresh information. Bowhead Specialty Holdings is the company we are focusing on today. They are incorporated in Delaware and their headquarters are in New York. Bowhead stock trades on the New York Stock Exchange under the ticker symbol BOW. It is good to keep this in mind if you want to follow the price of their shares. The main event of this report is the announcement of Bowhead's financial results for the last 3 months and the entire year of 2024. They released a press release about it, which is included as an exhibit in this report. So let's dig into those numbers and see how they performed. To see the details, we are going to scroll to Exhibit 99.1, which is the press release, which is where most of our information will come from. Let's focus on the highlights of their performance for the year. The filing shows that the net income, which is the profit after all expenses that belongs to Bowhead Specialty Holdings, was $105.7 million. This is a decrease from the previous year when it was $120.8 million, so the company made less than it did the year prior. Another key number is their gross written premium. This is the total premiums from policies that the insurance company wrote. This was up to $895.4 million, an increase from the previous year of $841.1 million. So even though net income was down, the amount of insurance policies they sold actually went up. Underwriting income, which is the profit from their insurance operations, also decreased to $115.7 million in 2024, from $134.1 million in 2023. So this means that the company made less profit from its insurance operations than the year prior. Net investment income is how much they made from their investments. That was up to $39.9 million in 2024 compared to $20.5 million in 2023. So the company made more money from investments, which is a positive sign. Now let's move on to the balance sheet. We will start by scrolling down to it. Looking at their assets, the company had $101.7 million in cash and cash equivalents at the end of December 2024. This is down from $141.1 million at the end of 2023. Total liabilities, which are the company's debts and obligations, were at $483.8 million at the end of 2024, up from $418.2 million at the end of 2023. This means that the company has more debt and obligations than it did the year prior. Total stockholders' equity, which is the value of the company that belongs to shareholders, was at $794.2 million at the end of 2024, up from $768.6 million at the end of 2023. This is a good sign that the company has been creating value for its shareholders. Now let's take a step back and look at what the company's executives are saying in their analysis. The company has 2 reporting segments. One is called the Specialty Casualty Insurance segment, and the other is called the Specialty Property Insurance segment. The Specialty Casualty segment profit was $28.9 million. The Specialty Property segment profit was $39.2 million, so the property segment was more profitable than the casualty segment. The company acknowledges that the underwriting income decreased in 2024, primarily driven by an increase in the loss ratio, which means they paid out more in claims compared to the premiums they collected. However, they highlight that the net investment income significantly increased, which helped offset the decrease in underwriting income. So, while their insurance business was slightly less profitable, their investments performed well. The company talks about their capital resources and liquidity, which is how much cash they have on hand and how easily they can access more. They mention that their primary sources of cash are the premiums they receive from their insurance policies, as well as the income they generate from their investments. They also note that they use cash to pay claims, operating expenses, and to fund their investment portfolio. As of the end of 2024, they had $101.7 million in cash and cash equivalents, as well as a significant investment portfolio. Bowhead states that they do not have off-balance sheet arrangements that have or are reasonably likely to have a material current or future effect on their financial condition. These types of arrangements are things that a company does that is not recorded on their balance sheet. The report also includes a section on critical accounting estimates, which are the key assumptions and estimates that management makes when preparing the financial statements. These estimates can have a significant impact on the reported numbers, so it's important to understand them. One of the most critical estimates for an insurance company like Bowhead is estimating ultimate losses. This involves projecting how much they will eventually have to pay out in claims for policies they have already written. This estimate is based on a variety of factors, including historical data, industry trends, and expert judgment. Finally, let's touch on any legal issues Bowhead is facing. The report states that there are no material pending legal proceedings against the company. This is good news, as legal battles can be costly and time-consuming. Okay, so let's put all of this together. The company saw an increase in gross written premium. However, net income and underwriting income were down, while net investment income was up. On the balance sheet, total assets and equity went up. However, the company has less cash and more liabilities. Overall, it was a mixed year for Bowhead. Looking at these results more broadly, Bowhead seems to be facing some challenges in its core insurance business, as evidenced by the decrease in underwriting income and increase in loss ratio. This could be due to a number of factors, such as increased competition, changes in the risk environment, or simply bad luck. However, their strong investment performance helped to offset these challenges, and their overall financial position remains solid. One potential risk for Bowhead is the uncertainty surrounding future claims. If their estimates of ultimate losses prove to be too low, they could face significant financial strain. On the other hand, if their estimates are too high, they may be able to release reserves and boost their profits. In conclusion, Bowhead Specialty Holdings is a company with both strengths and weaknesses. Their strong investment performance and solid capital position are positives, but their challenges in the insurance business and the uncertainty surrounding future claims are causes for concern. Thanks for watching, and if you found this analysis helpful, please like, comment, and subscribe.